One of Australia's biggest banks has just announced they're increasing their fixed rates by 0.6%. So what does it all mean? Let's dive in and take a look. Starting off from the top. So Westpac has actually released information just today on the 20th of July, saying that they're increasing their fixed rates for 1, 2, 3, 4, and 5 years from 0.5% right up to 0.6%. So for owner-occupier loans that are fixed in, principal plus interest, for 1 year, they're increasing by 0.5%, 2 years, 0.6%, 3 years, 0.5%, 4 years, 0.6%, and 5 years, 0.6%. We've seen that for interest only is a little bit less, and for investment properties, increasing by about 0.6% to 0.5%. Now, what does that actually mean? Well, that means that their fixed rate for 2 years, which is currently sitting at about that 2.89% in their current rate, is increasing by 0.5% or 0.6%, which now makes their new rate on their premium advantage package at 5.49%. So a 0.6% increase has a massive impact in terms of people's repayments. And that comes in line with what we've seen with a lot of the sort of anticipation of where rates are going. And I've got some information here from news.com where they're expecting the cash rate get up to about that 3.5% mark. Now, I guess if we have a look at the fixed rates and what that actually means from a dollar point of view, let's just say you're looking at a 2-year fixed rate previously where you were paying that 4.89% mark on a standard loan. So 4.89% on a standard loan of about $580, $590 per month, you're looking at $3,075 per month. Now that's gone up to the 5.49%, 5.49. It actually means the increased repayments are $3,290. Now, this fixed rate is starting to make it a bit of a challenge to decide whether to fix or stay variable. As we can see here, the official cash rate at the moment is at 1.35%. I don't know why they've said 2.25%, but it is currently sitting at 1.35%. We'll just have a look here at the cash rate on the official government website, 1.35%. Now, if they're predicting the cash rate to get to 3.5%, that's another 2.15% to go. So another 2.15%. To give you an idea, variable rates on the market at the moment, you can get into low threes. So low, 3.14%. So if you're on 3.14% and you're adding that increase in cash rate, your variable rate is going to get to the same sort of 5.29%. So we can see the banks are already sort of factoring in what potential rate rises could increase the variable rate by, and then kind of putting a margin on what the fixed rate is. It is becoming more of a challenge for those that are thinking of fixing in to commit to it, because the premium that you pay from today is so significant. And based on the predictions, even if the worst case does happen and we hit a cash rate of 3.5%, we're going to be in a situation where it might actually be more beneficial not to pay that 5.5% from day one, pay that 3.14 and ride the wave as it comes down. Now, I guess it is case by case. You need to look at your individual circumstances. Here at Hunter Galloway, we're mortgage brokers. So if you're not sure whether to fix or go variable, feel free to hit us up. We can have a look at your individual circumstances and give you a bit of an idea of what's going on. Now, based on the official cash rate futures index, this is the implied curve yield. They're expecting rates to go up and peak about 3.5, and then maybe some backwards trajectory coming in the later half of 2023. We've also seen that when rates go up, so let's say you're on a rate of 4.15% at the moment, if there is another 2 rate rises, as they're sort of predicting, come August and September of 0.5%, so another 1%, that's going to increase your monthly repayments by about $350 a month. So something to keep in mind. It's certainly important to know what's going on, and where the rates are starting to increase, it is starting to bite for a lot of consumers out there making it a bit of a challenge. Now, what do you do if you currently have a mortgage? What is the options for you? So in this situation where you are paying 4.1s, you're in the high 3s, 3.7s, it might actually pay to refinance your loan. So in a similar example where you've got a 28-year loan term, you're paying $590,000 mortgage at 4.15%, your mortgage repayments you're paying is $2,173 per $2,972 per month. Now, what you actually can do is if you wanted to refinance, we've got lenders that can get around that 3.14 variable at the moment. Also, you can get cash back. So you can get up to $4,000 cash back. There's Qantas points up for grabs. We've got other lenders giving $3,000 or $2,000 cash back. But let's just say hypothetically you did go for a 3.14% variable rate. Well, automatically you're getting your rate down nearly by 1%. You're saving in interest $330 a month in comparison to what you were previously paying. And if you wanted to keep paying that additional $330, you absolutely can, which means that you pay the loan instead of on a 28-year term, you pay it off in about 24 years. And you don't pay the bank $53,000 in interest. So it can make a lot of sense. And that's where reviewing your mortgage helps. Here at Hunter Galloway, that's something that we do. We're mortgage brokers. We're based in Brisbane. We deal with people Australia-wide. There's absolutely no cost for the service. So if you've currently had your home for a couple of years, you haven't reviewed your mortgage in a while, it pays to have a chat with us. Call us on 1300 088 065 or visit our website, huntergalloway.com.au. It's super simple to get in touch with us, and myself and my brothers will talk to you. So all you have to do is go on our website, huntergalloway.com.au, hit get a free assessment. Once the free assessment pops up, hit refinance and simply put your name, email address, and phone number, and we'll touch base with you within 4 business hours. Myself personally will give you a call. We'll discuss your situation, look at your circumstances, get a better idea on what you're after and what you're looking to achieve there. Anything else, guys, hit us up. We'd love to know in the comments below what you think. If you haven't had a mortgage for a long period of time and you've reviewed it and you had success, please share down below. We'd love to hear your story. Thanks again, guys, and we'll see you next time.